Managing Director with Ambit in the investment banking business, and I head our banking and financial services business. I think they recently announced banking recapitalization by the government of India has obviously got a lot of interest and a lot of interest from investors, banks, and other participants, industry participants across it. I think, but maybe if we see the context in which this is coming in. So the banking sector, as we all know, about half of it is dominated by the public sector banks, and the balance half split out between private sector banks. Actually, SBI is outside of this 48% is ESG banks ex-SBI. So there's another SBI, which is another quarter of that, and then balance is really about shy under 30% between private sector banks, NBFCs, foreign banks, etc., etc. So really, a strength of public sector banks is a fairly critical part for the credit growth of the country. That's also, we also see this in the context of the fact that in the last 2-3 years, banking sector growth has been at its lowest in probably more than 2 decades, coming down to single digits, which is really not a good sign for an economy which is looking to grow at hopefully 8% real growth rates in the near term. But there are 2 reasons for that. One, of course, there hasn't been significant capex that's come in, either from the private or public sector. And secondly, where is the bank capital or risk appetite to support the expansion plans should the demand come in? And I think in that context, if you see all the moves of the government, they've been so far focused on fixing a lot of things, and the next part really fixing on getting the growth engine up and booming. So where will the investment come from? I think the government is already has taken initiatives, starting with the road sector. A lot more initiatives on the power sector expected to come in. So it's really the mega infrastructure projects which will kickstart hopefully the overall investment cycle, which should then be followed by the private sector companies, services companies, other capital goods companies who will go in to support this and really overall create a fairly robust jobs market. For the government to actually implement this infrastructure rollout, you need support, and I think that's the context in which the public sector bank's role becomes critical in being able to support this growth rate. So while the private sector banks and the NBFCs have been continuing to grow sharply, but that's largely a lot more on retail and consumption credit, and large ticket infrastructure investments will need to perhaps be fronted by the public sector banks. So I think in that context, it's an extremely welcome move. On the back of this, we've already seen very exciting stock price performance by the stocks of the public sector bank, because the investors also realize the potential that these banks have, but they are weighed down with a lot of concerns, particularly the NPAs. I think the key, then we are still waiting for a lot more details of how this gets allocated, so where some of the structurings happen. Smart structuring on these in a manner which incentivizes banks not just to cover up past mistakes, but yes, cover up some of that, but provide growth capital. Create headroom for banks to go out and raise capital in the market, because eventually the government is committed to letting more private capital come into these banks as well, but the government has to take the first step, which I think they have started right now. So I think as some of these details come through, they get structured in a better manner, I think it's an absolute great positive, not just for the banking sector, but for the broader Indian economy and for all of us who work as well.